tariffs aren't the solution. I believe gold and silver are the solution. If gold and silver and the great abundance of the gold and silver you do have was leveraged appropriately, it could actually solve all of the debt servicing issues and the debt issues in the U.S.
You're watching Silver News Daily. Subscribe for more.
Silver is standing at the tipping point of a historic breakout, and almost no one is prepared for what's coming. Demand is surging across the globe. Industrial consumption is reaching record highs, and new high-grade discoveries, like those in Canada's Golden Triangle, are rewriting the playbook for silver mining. But here's the catch. The supply side is struggling to keep up, and the cracks in the system are getting bigger by the day. Think about it. Central banks and institutional investors are quietly making moves, accumulating precious metals as the global economy wobbles under the weight of mounting debt. The mainstream media won't tell you this, but silver is no longer just a safe haven asset. It's becoming a necessity for modern technology, and the world is running out of time to secure enough of it. Dolly Varden Silver, a rising force in the mining sector, has just made a discovery that could shake up the entire industry. Their latest findings in the Golden Triangle of Canada, one of the richest mineral regions on the planet, are proving that the future of silver supply isn't in the hands of overmined regions like Mexico or Argentina. It's here, in stable jurisdictions with untapped potential. And when the market finally wakes up to this reality, silver's price won't just climb, it could skyrocket. So what's driving this once-in-a-generation shift? And why is this the perfect storm for silver to explode in value? Stay with me, because by the end of this, you'll understand exactly why the biggest players in the market are positioning themselves now, and why you should be paying attention.
It's interesting. I work with some brilliant scientists, right? Brilliant scientists. And I was sitting with one of those brilliant scientists yesterday. And he was and he happens to also be a director of the company. And so he's a geologist, he's a director, but he is also born and raised in the local community there. So he's a third generation miner. And so he was telling me, his name is Robert McLeod. And, Robert's from one of the most famous Canadian mining families, the McLeod family, where some of the relatives have been inducted into the Canadian Mining Hall of Fame. Others sit on some of the largest precious metals boards, or they're chairing some of the biggest companies. And so Robert and I were having a conversation yesterday, and he was talking about the Brucejack mine. So Brucejack is an operation that is producing 300,000 ounces of gold per year. It's run by one of the biggest gold mining companies in the industry, Newmont. And Rob was telling me about the mineralizing event that went on for 7 million years. And what makes Brucejack so unique and rich and special is the amount of time that went into bringing in the fluids, bringing in the gold mineralization. For 7 million years, you had this active period of breccias and rebrecciation, and that's what makes it such a rich area. And so that it's those little nuances beyond the fact that, you've got the communities who, for
Silver isn't just another commodity, it's a finite resource, and right now the world is waking up to a harsh reality. We are running out. For years, mining companies have struggled to replenish their reserves, and with every passing year, the gap between supply and demand widens. But here's the real issue. Most investors don't realize just how bad the situation has become. Global silver production has been in decline, and major mining regions like Mexico, Peru, and Bolivia are facing increasing political and economic instability. Governments are tightening regulations, imposing higher taxes, and in some cases, outright nationalizing mining operations. This has put extreme pressure on producers, forcing them to cut back on exploration and development. And as a result, the supply coming to market is dwindling at the worst possible time. Meanwhile, demand isn't just rising, it's accelerating. Countries like China and India are stockpiling silver at unprecedented levels, while Western nations remain largely oblivious. The truth is, silver isn't just being hoarded by investors. It's disappearing into industrial use where it's often consumed and never recovered. Unlike gold, which is almost entirely recycled, silver used in electronics, solar panels, and medical applications is rarely reclaimed. Once it's used, it's gone. This is why supply shortages are no longer just a possibility. They're an inevitability. The silver deficit has been growing for years, and with fewer large discoveries being made, the market is on the verge of a major turning point. This is where Dolly Varden's high-grade deposit becomes so crucial. It's not just another silver mine, it could be one of the most significant discoveries in North America. And when silver shortages finally hit critical mass, assets like this will become the focal point of the industry. And this is just the beginning. Because while supply is shrinking, demand is exploding in ways most people haven't even begun to understand. The next step? A deep dive into the industrial silver boom and why the world's most advanced technologies are becoming dependent on this metal like never before.
And so, why location matters is we are in an area, and what most people will not appreciate is the fact that our project is technically in Canada, but it's really in the traditional territories of the Nisga'a Nation, who have sovereignty over their land. And why that's significant is what really drives the progress in this area that is referred to as the Golden Triangle. It's not federal government, it's not provincial government. It is really the Tahltan people who own much of the northern extent of the Golden Triangle, and the Nisga'a, who own much of the southern extent. And so understanding these nuances and understanding, like I always think, politics are local, issues are local, and you really need to understand. So if you look at our area at Dunnigan, for the last 100 years, we've had certainty. We've had uninterrupted production. We've had stability. And that certainty is going to last for the next 100 years. So why location matters is not only do we have access to clean hydroelectric power, not only do we have paved roads, not only is there a deep water seaport, not only are we in Canada, but most importantly, we're in the traditional territories of the Nisga'a, who are our biggest advocate for development because a portion of their population is unemployed. And they see a project like Dolly Varden as an opportunity to bring prosperity to their community.
Silver isn't just money, it's the backbone of modern technology. And right now, industrial demand for silver is exploding at a rate the mining industry simply can't keep up with. This isn't speculation. It's happening in real time. The world is undergoing a massive technological shift, and silver is at the center of it all. Take solar energy, for example. Governments worldwide are pouring billions into renewable energy projects, and at the heart of this revolution is silver. It's an irreplaceable component in solar panels used to conduct electricity with unparalleled efficiency. In 2023 alone, the solar industry accounted for nearly 20% of global silver demand. And with climate initiatives ramping up, that number is only set to grow. Countries like China and the US are racing to meet aggressive clean energy targets, and without silver, the solar industry simply can't function. But that's just one part of the story. The electric vehicle boom is another massive driver. Every EV on the road requires significantly more silver than a traditional gasoline-powered car. From battery management systems to charging infrastructure, silver is embedded in the very foundation of this industry. By 2030, global EV production is expected to triple, and with it, silver consumption will skyrocket. Then there's 5G technology. The next generation of communication depends on silver's unmatched conductivity. Every antenna, every circuit, every high-speed connection is built on silver, and with the world rushing toward a fully connected future, demand for silver in telecommunications is set to explode. The problem? The silver mining industry is not prepared for this level of demand. Unlike other metals, silver is rarely mined on its own. Most of it is a byproduct of base metal mining, like copper and zinc. That means silver production is dictated by the demand for other metals, not by its own soaring industrial needs. The result? A supply crunch unlike anything we've seen before. This is where companies like Dolly Varden Silver become critical. They're sitting on one of the highest grade silver deposits in North America in a politically stable and mining-friendly region. As industrial silver demand continues to rise, high-grade discoveries like Dolly Varden's will become some of the most valuable assets in the entire sector. And here's the kicker. While industrial silver demand is fueling a supply crisis, there's another major force at play that could send silver's price even higher. The global monetary system is under pressure, and investors are turning to hard assets like never before. In the next step, we'll break down why the economic chaos unfolding worldwide is creating the perfect storm for silver to surge.
That is a nice opening remark. Look, what makes Dolly Varden unique is we have an abundance of a very scarce metal, which is silver. And silver is so scarce that there are only 11 meaningful producers of the metal that are listed. And so investors who are looking to get exposure to silver miners have 11 choices. A few months ago, there was 13 choices. However, Gatos Silver and Silvercrest have been acquired, one by First Majestic and the other by Coeur. And so investors today have 11 choices. Now, beyond those 11 silver producers, you have 4 big developers, 4 big advanced explorers. And what makes Dolly Varden stand out? Again, it's a very small group of companies. You have 15 companies in the space that matter. And of the 4 that are non-producing, that are big, that are high grade, that are quality assets, what separates Dolly is where we're located. And I think location matters. So one of our peers is in one of a very, very exciting jurisdiction in Argentina, and that's Abra Silver. So Abra is, in Argentina is on this big upswing, but there's been times in the past where Argentina has been, there's the old saying, as rich as an Argentine, where, you go back 100 years and it was the place to be. And then there's been other times in recent history where you've had, you'd had to go with wheelbarrows full of money, where they're literally weighing money in order to exchange for goods. The other company in that list is in Bolivia, and Bolivia has its challenges. And then the other company in that list is in Mexico, which Mexico is the biggest silver producer in the world. However, with the narcos and with some of the socialist policy from the last 2 administrations, it's been challenging, to say the least. And
The global economy is unraveling, and silver is about to become one of the most important financial assets in the world. Governments are drowning in debt, central banks are losing control, and inflation is silently eroding the value of paper money. But here's the reality. While most people scramble to protect their wealth, those who understand silver's true role in the financial system are positioning themselves for what's coming. For centuries, silver has been real money. It was used alongside gold as a store of value long before the modern financial system existed. But over time, governments abandoned silver-backed currencies in favor of paper money that could be printed at will. The result? An explosion of debt and an economy built on nothing but promises. And now that system is breaking down. The U.S. national debt is spiraling out of control, surpassing $34 trillion with no signs of slowing down. Interest payments on that debt are now one of the largest expenses for the federal government, larger than military spending, education, or infrastructure. The Federal Reserve is trapped. If they raise interest rates to control inflation, they risk triggering a financial collapse. If they cut rates, inflation will accelerate, further destroying the value of the dollar. There is no way out. And that's why smart money is turning to silver and gold. Central banks have been quietly buying gold at record levels. But what they're not telling you is that silver plays an equally critical role. Silver is historically undervalued compared to gold, and when monetary panic sets in, silver tends to move even faster. We saw it in the 1970s when inflation ran wild and silver soared nearly 800%. We saw it again in 2011 when the Federal Reserve's money printing spree sent silver to nearly $50 an ounce. And today, the conditions are even worse. But here's where it gets interesting. While silver demand is rising, governments and financial institutions have done everything they can to suppress its price. Why? Because silver is a direct threat to the fiat money system. If silver and gold rise too quickly, it signals to the world that confidence in paper currencies is collapsing. That's why silver's price has been artificially held down for years. But suppression can only last so long. This is why companies like Dolly Varden Silver are so crucial right now. When the financial system cracks and investors rush to precious metals, physical supply will dry up. The major producers are struggling, and the only way to meet demand will be through new high-grade discoveries like those in Canada's Golden Triangle. And if you think governments are just going to sit back and let silver prices rise naturally, think again. In the next step, we'll dive into how global trade policies, tariffs, and political instability are further fueling the silver supply crisis, and why this could be the trigger that finally sets silver free.
I look at look, just going back to Dolly for 1 second. I look at some exciting things that are happening in not just our project but our neighborhood. There's some exciting discoveries that are making the whole area more valuable. And when I think about the United States as a Canadian, I want a strong neighbor. I want a neighbor where we're working together. And what's concerning for me is after the Second World War, the official gold reserves have really shrunk. And thankfully, I think that thankfully the gold window was closed temporarily because, you had about 10,000 tons of metal that left your shores. That as official, I think the official estimates were close to 20,000 tons, and I believe the official estimates now are 8,000. So, we've seen a big move of metal post Second World War up to the early 1970s, and thankfully with gold being set free and to be sort of quasi free. I think there's some argument around how free the price of gold is, but my point here is, look, I believe that a strong U.S. and a strong Canada and a good partnership, and that's why, look, we're going to be having an election up here in the north, and I'm hoping we elect a new leader that, I think Canada has got a bright future. I really do. I think, we've been given and granted an incredible endowment of resources. We've got more land than we have people, and 90% of our population lives within 100 kilometers, 60 miles of the U.S. border, and so we've got an abundance.
The silver market isn't just being shaped by supply and demand. It's being manipulated by governments, trade policies, and economic warfare. Around the world, tariffs, sanctions, and political instability are disrupting the flow of silver, tightening an already strained supply. And here's the key takeaway. While politicians play economic chess, silver is quietly becoming one of the most strategically important metals on the planet. Let's start with tariffs. The US and China, the two largest economies in the world, are locked in a trade war, and critical metals like silver are caught in the middle. China is a major consumer of silver, using it for everything from solar panels to high-tech manufacturing. But as tensions escalate, supply chains are being disrupted, and Western nations are scrambling to secure their own sources of silver. This isn't just about trade, it's about national security. The US has already classified silver as a critical mineral, and if access to foreign supply is restricted, domestic producers like Dolly Varden Silver become even more valuable. Then there's the growing political risk in silver-producing countries. Mexico, the world's largest silver producer, has been tightening its grip on the mining sector, increasing taxes and making it harder for foreign companies to operate. Bolivia and Argentina, both rich in silver, are dealing with economic crises and unstable governments. Investors are starting to realize that silver production from these regions isn't as reliable as it once was. This brings us back to why location matters. Canada's Golden Triangle is one of the safest and most stable mining jurisdictions in the world. Dolly Varden Silver operates in an area with strong infrastructure, access to hydroelectric power, and government support for responsible mining. When global silver supply chains start breaking down, high-grade deposits in politically stable regions will become the focus of the industry. But it's not just mining disruptions and tariffs that could send silver prices soaring. There's another factor that's being completely overlooked: market manipulation and the hidden short positions that have been keeping silver suppressed for years. And in the next step, we're going to expose the truth about how banks and institutional investors have been artificially controlling silver's price and why their grip on the market is slipping.
Great. It's a great question. It's a timely question. It's a relevant question. If this was 1979, I'd be concerned. If you look back the last time we were in an epic bull market for precious metals, in my opinion, what took gold from $35 an ounce in 71 to over $800 an ounce in 1980 was really the U.S. investor. And I think we've moved on again, and I don't know if you agree with the statement, but we've moved to a global world, where a lot of the demand for gold is coming from outside of the United States. It's coming from Russia. It's coming from China. It's coming from India. It's coming from, so the one thing I think that has an exemption and exception to the tariffs is gold and silver, because, the world wants gold and silver. And if I can't sell my gold or silver, or it's going to be punitive to sell it to the US market, well, then I can sell it to the rest of the world. And I really think the reason gold has gone from $300 to $3,000 is not because of the US.
For decades, silver's price has been held down by one of the biggest open secrets in the financial world: market manipulation. The banks won't talk about it. The mainstream media won't cover it. But the evidence is undeniable. Institutional investors have been artificially suppressing silver prices through massive short positions, and the cracks in their control are finally starting to show. Here's how it works. Unlike gold, silver is an industrial metal with a relatively small market. This makes it easier for large financial institutions to control prices through paper contracts, specifically futures contracts on the COMEX. Instead of buying and selling physical silver, banks trade paper silver, placing massive short positions that create the illusion of abundant supply. The result? Silver's price is kept artificially low, preventing it from reflecting its true value. But manipulation can only last so long. Physical silver demand is rising, industrial consumption is at record highs, and the supply deficit is growing every year. The banks that have been shorting silver are running out of time because, at some point, investors are going to demand physical delivery. And when they do, the system could break wide open. We've seen glimpses of this before. In 1980, the Hunt brothers attempted to corner the silver market, exposing the fragility of the system. Silver rocketed from under $6 to nearly $50 an ounce before regulators stepped in to change the rules and protect the banks. Then in 2011, another silver rally was crushed when sudden margin hikes forced investors out of their positions, allowing banks to regain control. But today, the situation is different. The demand is real, the supply shortages are real, and the institutions that have been playing this game are losing their grip. This is why physical silver is becoming the most important asset in the market. When the short squeeze finally happens, silver miners will be in the spotlight like never before. And that's where companies like Dolly Varden come in. Unlike paper silver, which can be manipulated, high-grade silver deposits in stable jurisdictions represent real, tangible value. When investors wake up to the fact that there isn't enough physical silver to go around, companies with rich, untapped resources will become the biggest winners. But before we get there, we need to talk about the one signal that has historically predicted every major silver breakout: the gold-to-silver ratio. In the next step, we'll break down why this indicator is flashing one of the biggest buy signals in history, and what it means for silver's explosive potential.
For really not just the last 100 years, but if you go back 1,000 years, whether it was copper in the north or precious metals in the center of the Golden Triangle, the Northerners have been, extracting the metal out of the earth. And so it's got the right geological setting. And it's why, if you look back at history, if you go back to the 1920s, okay, The most profitable gold and silver mine in North America was in the Golden Triangle. It was the premier mine owned by the Guggenheim family. And that operated, produced 2 million ounces of gold and 45 million ounces of silver. And it operated right, throughout the 20s, around the time of the Great Depression. And it really shielded the North. And people found prosperity at a time where there was so much hardship. And then you fast forward to more modern times, 1989, the Eskay Creek deposit was discovered, which Barrick was producing in the 90s. And Dunnigan, I want you to envision this. Go back into the 1990s and picture this area in northern Canada, right on the Alaska border. There's no roads, there's no power, there's nothing. But the price of gold was measured not at $2,000 or with a 2,000 handle, but with a 200. So at a time where the glaciers were there and a time where there's no infrastructure with $200 gold prices, Barrick was making money flying gold out of Eskay Creek, flying it. That's how profitable it was. And then you fast forward, if 1989 is not modern enough, when Bruce Jack went into production, 2017, that's when the power, the roads, all the low cost, clean infrastructure is in place. And so look, it is defined as the richest 20 kilometers on planet Earth for gold and silver. And this is the area that I have focused the last 5 years with Dolly Varden, building this company for this coming bull market in precious metals.
If there's one indicator that has consistently signaled massive moves in silver, it's the gold-to-silver ratio. This simple yet powerful metric measures how many ounces of silver it takes to buy 1 ounce of gold. And right now, it's flashing one of the strongest buy signals in history. Historically, the gold-to-silver ratio has hovered around 50.1, meaning that silver is typically priced at 1/50th of gold. But when silver is undervalued, this ratio can skyrocket, hitting extreme levels before a massive silver breakout. And today, we're seeing exactly that. Right now, the gold-to-silver ratio is sitting near 80.1, an anomaly that has only happened a handful of times in the past century. And every time it reaches these levels, silver doesn't just rise, it explodes. In 1980, the ratio dropped from 80.1 to 15.1 as silver surged nearly 800%. In 2011, the ratio collapsed from 75.1 to 30.1, pushing silver to almost 50 an ounce. The pattern is clear. When the ratio is this high, silver is massively undervalued, and it never stays that way for long. But what makes this time different? Unlike past cycles, silver isn't just following gold's lead. It has its own powerful drivers. Industrial demand is surging, supply is shrinking, market manipulation is crumbling, and the financial system is teetering on the edge. All of these forces are aligning, creating the perfect conditions for silver to play catch-up in a historic way. And here's where things get really interesting. While gold is already approaching new all-time highs, silver is still trading far below its past peaks. The opportunity here is undeniable. When the gold-to-silver ratio finally corrects, we could see silver skyrocket past $50, past $100, and potentially much higher. But there's another factor that could send silver soaring even faster: investor sentiment. The tide is turning, and money is beginning to flow into small-cap silver miners at a pace we haven't seen in years. In the next step, we'll break down why smart investors are piling into companies like Dolly Varden Silver before the mainstream catches on, and how the biggest gains are yet to come.
Then 50, then 100, then 200. And, I've got such a great group of people around me. One of our directors, and he's also the head of our technical advisory committee, his name is Michael Henriksen. So Michael was with Newmont for 10 years as their head structural geologist. And Michael went all over the world suggesting to Newmont what projects are going to be tier one assets. My point is, we were at a recent meeting in January where we got the whole board together, we got the technical committee together, and Michael suggested that, look, it's time now to take some really big step outs. It's time to go from the 25, the 50, the 100, the 200. Let's go out 800 meters, he said. And I really celebrate, we're coming into a moment right now where small cap stocks are breaking out. The gold to S&P ratio is turning up. We're in a moment right now where for the first time in about 14 years, miners are starting to get attention, get inflows. They're starting to catch a bit. And so this is a wonderful opportunity. So just as interest is coming into the sector, we have a great understanding of our project, and we have $32 million in the bank, and we're going to take 20 million of that starting in May, and we're going to have 3 drills turning, and we're going to take those big aggressive step outs. We've been very systematic. We've been very surgical. We've been, some could even say, conservative. But now it's time, with all the understanding, all the science, the structural analysis, the clay analysis, the radiometrics, it's time to hone in and see how big this system is. So it's an exciting time, but the great news is, Dunnigan, if we're unsuccessful, because in exploration, that is a possibility, we've already got 140 million ounces of silver equivalent identified on the property. So we have this foundational deposit. And at these metal prices, it's very, 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 very strong in terms of the grade, the location, and so no, it's an exciting time. I feel very, very grateful that I'm here right now as we walk into a moment where silver is starting to and again, we're still only at an 88-to-1 silver to gold ratio. So I still think that despite small caps ticking up, and despite gold versus the S&P ticking up, silver to gold has a long catch-ups to still do.
Something big is happening in the silver market, and the smart money is moving fast. For years, mining stocks, especially small-cap silver miners, were ignored, overlooked, and undervalued. But now the tide is turning. Institutional investors, hedge funds, and even retail traders are waking up to the reality that silver isn't just another asset. It's one of the most explosive opportunities in the market today. Historically, silver miners have always outperformed silver itself during bull markets. When silver moved from $9 to nearly $50 between 2008 and 2011, top silver miners didn't just double or triple in value. They exploded by 500%, 1,000%, even 2,000%. This is because silver mining stocks offer leverage. They don't just reflect the price of silver, they multiply its gains. And right now, we're seeing the early signs of a massive shift in investor sentiment. Silver is still flying under the radar, but that's exactly when the biggest opportunities exist. While the mainstream financial media is obsessed with tech stocks and crypto, experienced investors are quietly accumulating shares in companies like Dolly Varden Silver. They see what's coming. They know that physical silver supply is dwindling. They understand that industrial demand is surging. And they realize that silver miners, especially those sitting on high-grade deposits in safe jurisdictions, will be the first to benefit when the price explodes. Dolly Varden isn't just another silver company. Their project in Canada's Golden Triangle is positioned to be one of the most significant high-grade silver discoveries in North America. With 7 known deposits and aggressive expansion plans, they are strategically placed to capitalize on the coming silver boom. The window of opportunity is closing fast. When silver finally breaks through resistance and starts making headlines, the biggest gains will already be in motion. And that brings us to the final most important question. How high can silver really go? In the next step, we'll bring everything together and break down why silver's next move could rewrite the rules of the financial system, and why those who act now could be looking at life-changing returns.
In that rich Golden Triangle history, there was mines that were discovered and mines that were produced, like the Dolly Varden silver mine, like the Torbrit mine. And they were thought to be separate systems, separate deposits. And often, if you go back, you'd look at, there was different owners, different claim holders. What I have done is I have systematically created a land package that is about 10 miles from south to north. So we've got this contiguous package of 10 miles. And within that 10-mile package, we've identified 7 deposits. But the breakthrough was not looking at these deposits as individual deposits, but as part of one mineralizing system. And there's two areas on the property where we've actually got to within 300 meters. Like, so we've taken these deposits that were, in some cases a mile apart, and we've contracted that through step out drilling to expanding the veins. And we're now at a point where we're doing some ambitious step out drilling that is going to show and test that theory that we have that this is one system. And if we do that, the implications are a lot more tonnage, a lot more gold and silver in between. And so that's exciting. And what the most exciting part of it all, though, because I've been around advanced exploration, development, and production for the last 22 years professionally, what I've found in my career, and this is what excites me, when you have two mineralizing systems coming together, as you get closer to that heat source, often what happens, and we're seeing this in our drilling, so we're finding silver on average at about 300 grams per ton. About a third of a kilo is the average. But as we get closer to that heat source, the grade is elevated, it's doubling. And the mineralization that started as sort of narrow mineralization is starting to open up. So it's getting wider, it's getting thicker, it's getting richer. And what history has taught us through studying different deposits and having the experience is when these two deposits come together, there's the potential for something pretty meaningful in terms of grade and in terms of tonnage. And so that's exciting. And it's been validated because we started with 25-meter step outs.
The question isn't if silver will explode, it's how high it will go. Every major economic crisis, every monetary reset, every supply crunch has sent silver skyrocketing. And this time, the setup is stronger than ever before. We've covered the fundamentals: soaring industrial demand, dwindling supply, market manipulation losing its grip, and investors rushing into silver like never before. But what does this actually mean for the price? Let's look at history. In 1980, silver surged to $50 an ounce, driven by inflation fears and a supply squeeze. Adjusted for today's dollars, that would be well over $150. In 2011, silver hit $49 when the Federal Reserve flooded the market with liquidity. And now, the financial and industrial conditions are even more extreme. Supply shortages are worse than they've ever been. The monetary system is under more stress than at any point in modern history. Central banks are hoarding gold, and silver is still criminally undervalued compared to its historical relationship with gold. The gold-to-silver ratio suggests that if gold hits $3,000 or more, silver could easily trade above $100, and that's a conservative estimate. But here's the most important part. Silver is one of the only assets where small investors still have an advantage. Unlike gold, which is increasingly controlled by central banks, silver is accessible. The physical market is already tight, and once mainstream investors realize what's happening, the floodgates will open. And that's why silver miners, especially companies like Dolly Varden Silver, are positioned for massive upside. Physical silver will be harder to find, but high-grade silver producers will be in the perfect position to capitalize. We are standing at the edge of a historic silver bull run. The smart money is already moving. The market is waking up. The opportunity is now. And remember, this is not financial advice. Always do your own research and consult with a professional before making any investment decisions.
It's a beautiful land where we're well endowed with the resources. We've got clean air, an abundance of drinking water, and all of those things make us a great neighbor to the United States. And so I'm hoping for some political change in this country. And I'm hoping that, that really ushers in a new era of cooperation. And look, I don't think tariffs work. It was, you had a great president in Ronald Reagan that made this point, over 30 years ago that, tariffs don't work. And but I think Mr. Trump, and this is in my humble opinion, I don't know what choices he has. He's up against a very difficult debt servicing issue, and I believe though that tariffs aren't the solution. I believe gold and silver are the solution. If gold and silver and the great abundance of the gold and silver you do have was leveraged appropriately, it could actually solve all of the debt servicing issues and the debt issues in the U.S. And I think there's some very brilliant people like Judy Shelton who've come up with some incredibly innovative ideas on linking current bonds to gold to do away with a coupon or a yield, and in exchange be the convertibility into gold. And I think that is something where if you really want to clean up the deficit, and if you really want to put the U.S. on a sustained path, and it's not just a U.S. issue, it's a Canadian issue, it's a European issue, it's a global issue. We've been operating in this massive credit system that's unsustainable. And it's, you look at some of these recent crises we have had, whether it was 2020, 2008, we need more and more and more money or debt to service. And we're reaching a moment where something has to give. And I just hope for all of your viewers, you're doing such a phenomenal job educating people about how they could safely move towards, maintaining their purchasing power and preserving their wealth.
Silver is no longer just a hedge, it's a necessity. The forces driving this market are stronger than anything we've seen before. Supply is shrinking, demand is skyrocketing, and institutional suppression is coming undone. The world is waking up to silver's real value, and when this metal moves, it moves fast. We've seen what happened in 1980. We've seen what happened in 2011, and now all the signs point to a new silver supercycle that could break every previous record. Whether it's $50, $100, or even higher, the opportunity here is undeniable. And it's not just about physical silver. The biggest winners of this bull market will be the silver miners, especially those in stable, high-grade regions like Canada's Golden Triangle. Dolly Varden Silver is sitting on one of the richest untapped silver deposits in North America. As silver prices surge, companies like this won't just benefit. They'll become the center of the silver market's next big move. But here's the reality. Once silver starts its breakout, the biggest opportunities will already be gone. The time to position yourself is before the headlines. Before the rush, before the silver squeeze really takes off. So the only question left is, will you be ahead of the curve, or will you be chasing silver after the biggest gains are already made? And remember, this is not financial advice. Always do your own research and consult with a professional before making any investment decisions.